Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. I'm going to be going over the datasets and the SPY for May 15th, 2025. And with that said, let's jump straight into it. Now, today, Wednesday the 14th, we did not have any data. We just had a couple Fed speakers at random times of the day. Uh, Not really anything too important. Now, going into tomorrow, the 15th, we have the PPI data at 8:30 in the morning. Very important data. Sorry, I'm losing my train of thought. I'm really exhausted right now. Um, PPI data 8:30 in the morning, followed by jobless claims. Again, the jobless claims have normaled out over the last two prints, so I'm not too concerned about that right now. The PPI will be important, but again, the PPI does follow suit of the CPI for the most part. So generally you can use oh, sorry, my cat's jumping on my lap. Um, Generally you can use the CPI reading that comes out earlier in the week to gauge what's going to happen with the PPI. It doesn't always go hand in hand. Sometimes we will get a cool CPI and a hot PPI, but generally there's a correlation. So with the CPI coming in cooler, even though it still was high from estimates, uh, we should be anticipating that the PPI will be coming in cooler as well. Now, the market will be paying attention to that data, obviously, very much. Um, Very important data sets. Along with the PPI, like I said, the jobless claims, we have the retail control and retail sales. Very big data sets there. And then 10 minutes after all that data comes out in the pre-market, we have Fed Chair Powell speaking. And, I don't need to go into why that's important too much. Everybody knows the Fed Chair, he has a ton of sway on the market. Now, granted, I don't know what this speech or talk or roundtable is about. I have no clue. I don't know if this is some FOMC type speech. I don't know if this is some banking speech. I don't know if this is like a roundtable with business leaders. I have no clue. So we're kind of in for a wild card right there. And everything I've tried to look up on this speech, I can't find. So, um, yeah, we'll see once it comes out tomorrow, what he has to say. It could be very important, or it could just be really nothing. But out of pretty much anyone besides President Trump, who has the power to move the market right now, it is Fed Chair Powell. So yeah, just be aware of what's being said. Whether it's from wherever you get your market news, or whether it's coming from, the unusual whales bot. We have that on our server, dollar a month. uh, anyway, the industrial production data comes out 9:15, so that's still again in the pre-market. Um, so a lot of this data is coming out in the pre-market. Now, we should really be expecting some sort of crazy swing, and by that I mean, like, for example, if we expect it to head downward, we should very likely see some pull upward and then it pulling down, vice versa. So don't just assume whatever the price action is in the pre-market that the whole day is going to carry that action, okay? Um, we will get into that a little more in the technical analysis part though. With that said, um, a lot of data is coming out very early, so there's a lot to digest before the market even opens. I do suggest waking up early to catch these data sets this time. This isn't the type of day where you want to sleep until right until the market opens. Try to be up a little early. I'm guilty of this too, so I'm definitely going to be waking up on time and not sleeping through my four alarms. Um, anyway, after that, we have retail inventories for auto, that's not important, or excluding auto, business inventories, those aren't important data sets at all. Now the Atlanta Fed GDP sometimes moves the market, but I'm not really expecting it to do a whole lot because Really, a lot of the momentum from the day is going to be from the PPI data, the retail control and sales data, and whatever Fed Chair Powell has to say. Now, we do have Vice Fed or Fed Vice Chair uh, Barr speaking at 2:05 p.m. He can sometimes say something really important, sometimes not. I don't really expect a whole lot of like market shifting directions from what he has to say. Uh, that's just me personally. But again, it is important that we stay on top of what these Fed members are saying. It is really important. Now, going into what we have for tomorrow, just so that I so tomorrow we have a couple things that we have to be aware of, and I didn't mention this earlier in the week because it slipped my mind. Uh, we have OPEX this Friday, which if you guys have been following me, you know I don't like OPEX. It's not a very fun day to trade. It basically the market makers and the dealers just focus on a single strike and drive the price to that strike and lock it down. So even though there's a lot of action on those days, it's very yeah, I don't like trading OPEX very much. Um, Besides OPEX and besides that, let me step back. This OPEX is going to be extremely call weighted too. So that means that there is a lot of incentive for dealers to pull the market downward to kind of counteract the heavy call selling. Um, It doesn't always work that way. Sometimes we will get an OPEX where it's just absolutely slammed with calls, and everyone's assuming that it's the best time to short it because the dealers, excuse me, have a high interest in pulling the market down, but instead they'll just send it high above those strike prices and buy shares and basically set a whole new delta way above the level and just kind of equal it out that way too. So that is something to be aware of. It doesn't always work as you think it might. Uh, so this OPEX is very call weighted, as I said. I mean the calls are absolutely stacked in tech across the board. Um, we're going to be seeing an OPEX where we have had buying from the 507 all the way up to the um, 588, 589. So that's trillions of dollars of weight of calls being pushed on Friday. Okay, so just be aware that uh, it's not the best day to trade. Okay, if you don't know exactly what you're doing. We have the housing data Friday as well as some Michigan inflation data, Fed GDP. Nothing super important. We do have some consumer sentiment stuff that can be a little important, but really nothing too big. It's mainly going to be where the dealers want to close the OPEC strike. That's the big thing for Friday. Just a quick reminder before we get into the technical analysis. If you've been finding value in my insights, consider joining my Patreon. For just $12.99 a month, you'll get access to my trades, courses, and powerful tools to help you grow as a trader. I'd love to have you be a part of our team and community. And it's less than 43 cents a day. So if you'd like to join, click in the link in the description. Thanks. And getting into the TA, as always, let's go ahead and open the daily chart and open the moving averages and the Bollinger Bands. And I'm going to try to not ramble a whole ton tonight. Um, I am extremely exhausted, so I'm just kind of phasing in and out a little bit. I apologize. Um, okay, let's get into this. So the market closed at 587.59, so we did not get a higher high today compared to the high we got yesterday. It almost got there. It went up to 588.98, but yesterday we saw 589.08. So, very close, but not exactly the same area. Okay, and that is very important when we are discussing the upper Bollinger, and I'll get into that in a minute. Now, with that said, market closed at 587.59. The 5 mile is at 577.36, so it's extremely likely we're going to see this 5 mile being pulled up towards the 580, 581 range, possibly even 582. Okay, and that seems like a lot, but this 5 mile is just absolutely elevating up right now. So, flying, it's absolutely soaring right now. Um, with that said, that means that the upper bounds of the 5 mile could be anywhere from 582 to 584, potentially even 585. Um, that means that technically we could be testing the 5 mile range, uh, very soon. The overnight's at 586.50, so we would only have to be moving down $1 to $2 to be within the upper bounds of the 5 mile. And with that said, the lower bounds of the 5 mile will be potentially all the way down to the 576, all the way up to the 578. Okay, so we do have a very large range on the day tomorrow. All the way up to uh, that 585, 586, all the way down to the 576, 577. So that's a whole $10 range on the 5 mile right now, which is pretty absurd, but sometimes that just happens that way. Now, the 10 mile is starting to close in towards where the market is, and it's actually right at the 200 mile as well. So it's at 569.55, and so it's going to be pulling up to that 570 range by tomorrow. So that either will be basically directly on or crossing that 200 mile, which that's very important for the bulls. Okay. The 20 mile is at 554.06, so that's starting to get up to that 560 range. That's very really really important. That's telling the market that support is being pulled upward pretty aggressively, and that um, very likely the market's trying to break above this 200 mile range. And by break above, I mean pulling all the support above that. Um, the upper Bollinger is at 594.93, so we have started pulling away from that slightly, and I did describe what this move uh, kind of entails. Now, with that said, um, day one we got the higher, or we got the new high. Day two we got the higher high. Day three we saw consolidation. We were trading in an extremely tight range today. So, um, sorry, I'm losing train of thought. Something popped up on my screen. We were trading in an extremely tight range today, but we did not test any levels. We were, as you can see, this candle, um, above the 5 mile, but below the upper Bollinger. So we are starting to pull down and consolidate towards that 5 mile range. It's extremely likely we test the 5 mile tomorrow. Um, I would be very, very, very surprised if we don't. Uh, we would have to get some very, very, very cool data prints to um, essentially move the rate cut percentage upward. Um, sorry, I'm talking like a robot right now. I'm so tired. Basically meaning that whatever comes out tomorrow would have to be significant enough to shift the actual Fed's perspective on the market to really, I think, in my opinion personally, um, not retest this 5 mile. I would be very, very surprised if we bounce off of this level, and this can happen, okay? So let's talk about that. Let's talk about a 5 mile bounce. Sometimes you don't always get to the lower bounds. Sometimes you don't always get to the upper bounds. For example, if you're underneath the 5 mile, sometimes you won't always get to that upper bounds to test the level. Sometimes the only liquidity needed is just the actual level itself. So, for example, if we do start heading downward and say we do start testing the level and say that the level is at 582, okay, we may not see that lower bounds of the 580. We might only see that 582 and then it bounce up and then start heading back up to that upper Bollinger again at that 595 range. That is totally a possibility. Now, is that what I think is going to happen? I don't. I do think that the market is going to test this level and start heading downward towards this 20 mile. I see the cup finished out. And let's kind of highlight that for a moment. The drawings are going to pop up and it's going to look terrible, but I will explain it all. So we have this cup built. We now have the larger cup starting to form, so I'm actually going to delete this smaller cup and draw out the larger one. So just one moment. It's right at this 595.80. Okay, and we are not there yet. Okay, that does require more of a move up to get to that level. So that's the big cup we're working with here, and we absolutely can close this cup first before we start heading down. But it does make a lot of sense to start filling out this liquidity. And I don't know why these are so wonky right now. And of course it's not going to let me move it. Alright, there we go. But we do have a nice structure for a head and shoulders here, whether we pull upward or not. Okay. I do think, as I stated, I do think we come down and test the 5 mile. Whether we head back upward from that test, we'll have to see, but I do think we test the 5 mile from here. Um, the upside room is just not too high. We have the upper Bollinger, but again, it's not common at all to see the upper Bollinger uh, pushed into, pulled down, and then pushed right back into like that without the 5 mile being tested. In fact, it usually just doesn't happen like that, and same for like the lower Bollinger too. But even here, while that looks close, we got a 5 mile test in there. Same with that, got a 5 mile test, 5 mile test, 5 mile test. So it's, yeah, I mean, it's really not a common trend to just stay super high within the 5 mile. Now, some of these events do happen like that, but it's just not common. Um, so yeah, I do think we're pulling down to the 5 mile tomorrow. That is kind of my thesis. And what you want to look for, um, I'm going to show the hourly chart, but you can follow this on your hourly. I'm looking on the 4-hour chart though. We have this really massive island gap right here, and you're going to see all this other drawing. I'm sorry, I can't delete it right now. But we have this really massive island gap right here. And because we have that massive island gap, we have essentially two little islands formed right here. And these are big blocks of liquidity that can be used to be pulled downward. So this can be closed downward right there. Close that room. Test the area right in there, and of course that's right where the 5 mile is expected. That's, that 580 range. So that's right within our test range. Build some liquidity back upward, and then retest the 20 mile back at the 560. Very reasonable moves, and these are massive gaps to definitely take those type of movements in. Um, yeah, I'm very bearish right now, and it's very hard to be bullish when we have pushed to the upper Bollinger like I've mentioned. Um, because it's like, for example, upper Bollinger move. Would you want to buy calls here? Maybe as a hedge, right? Um, but this isn't the area to buy calls. That's the area to buy puts because you generally head down. Same here. Do you buy calls or puts? You buy puts, obviously, right? Do you buy calls or puts? Puts. Do you buy calls or puts? Puts. um, you can do this on almost any chart, and then you will see that this is a very reoccurring trend. Um, you know, upper Bollinger, do you want to buy calls or puts? Puts, calls or puts? Puts. Um, yeah, so it's extremely consistent. Okay, and I've literally just shown you years of upper Bollinger moves. Okay, um, just within that quick little scroll. So this should not change. We should, as I said, test the 5 mile, move from there. Okay, that's the move. Um, any of the short positions that were purchased up in the day two upper Bollinger at that 589 that we grabbed need to be sold at the 5 mile. Okay, even if we're going to head down to that 20 mile, leave a couple runners, but you want to sell it at the 5 mile. Don't risk it. Once we get to the 5 mile, that's when you open new positions for about 2 weeks out. And you want to open both calls and puts. You don't want to be just opening one side or another. Okay, you want to be hedging both sides, ensuring that, if we're going to be heading up again, you're going to catch that action. If we're going to be heading down, you're going to be catching that action. We're after this 5 mile move, we're potentially going to be having $20 range on the upside and $20 range on the downside. So quite a bit. There's going to be a lot of area to um, you know build support and head upward if we're going to continue heading upward, or reject that major selling channel if we're going to head downward. So anyway, I'm super tired and I don't even remember half the video, so I'm gonna end it here. Really expect some downside tomorrow, but if we do see upside potentially, then the target is the 596 essentially, because that's the next gap. If they're gonna take anything, that would be the range. So that would, essentially be a $10 move on the upside. So yeah, have a good day. Trade safe, and I will talk to you in the next video, and I apologize for always being so tired. I have some weird medical thing going on right now that I'm trying to get, you know, a handle on. So I apologize for always sounding low energy and everything else. This isn't how I normally am. So yeah, have a great day. Talk to you later.